Happy Monday. You're watching Businessworld Live. I'm Danie, Laurel.
And I'm Delos Santos. Here are the biggest stories to kickstart this trading day, Monday. Central banks around the world have begun working on the release of their own digital currencies. But over here in the Philippines, BSP Governor Ben Jocno says there's no need for that virtual asset just yet.
Now, the government plans to offer up to $500 million in debt papers this year to fund its climate mitigation projects.
Revamp in the PSEi. Emperador and Monde Nissin are set to join the 30-member Bellwether Index, replacing Bloomberry and Robinson's Retail.
And the retailers group is throwing its weight behind proposals to require shoppers to present proof of COVID-19 booster shots before they can enter establishments. We begin our broadcast with the Bangko Sentral saying that it won't issue its own central bank digital currency or CBDC in the near term.
BSP Governor Ben Jocno says their focus for now is to strengthen domestic retail payment system as the country remains heavily reliant on cash. Jocno says the Bangko Central's technical working group has consulted with other central banks, tech providers, and even small businesses in relation to the use of CBDC. This as central banks in China and Europe have already started working on their digital currency. Jocno notes works for the use of CBDC for cross-border payments and payment of equity securities are still on the exploratory stage. The BSP hopes that half of all transactions will be done digitally by 2023. In 2020, about 20% of payments were done online. A central bank digital currency can serve as a medium of exchange or store of value. Now, unlike other digital assets, it is regulated by a central bank, making it less prone to volatility. Now, on to some COVID-19 updates. The Octa research says daily infections in the country may further decline to 1,000 to 2,000 cases by the end of the month. Octa's Guido David said this as the number of new daily infections continue to drop. As of February 2, the country's reproduction number decreased to 0.55, and yesterday the positivity rate fell to 21.5%, with the DOH logging more than 8,300 new cases. Meanwhile, the vaccination for children aged 5 to 11 begins today. This comes after 780,000 reformulated Pfizer shots arrived in the Philippines last Friday. On Saturday's Laging Handa briefing, the National Vaccination Operations Center assured that these reformulated vaccines are safe for children.
Ang formulation naman ay very safe sa ating mga vaccine recipients, no? And then talagang ito yung suited for sa age group nila. Alam natin na hindi din sila exempted, no, sa pagkakaroon ng COVID-19 infection, at at this time po ito na po yung time na pwede din natin silang mabigyan ng additional ng protection against COVID-19.
On the other hand, retailers express support for the proposal to require store visitors to present proof of getting booster shots. The Philippine Amalgamated Supermarkets Association said this will ensure that consumers have taken all necessary measures to contain COVID-19. The group added that the proposal will also give the public more confidence as mobility increases. Another start of the trading week, Dan, and we're seeing some revamp happening over the index. Were those new additions a surprise there?
Happy Monday, Jess. To some people, not necessarily a big surprise, but let's take a quick peek at the index open here, jumping up by 11.62. That's up by 0.2%. We are not back at the 7,500 levels yet, but hopefully getting there. And you did mention those are definitely in focus right now. Let's take a look first at Emperador. Emperador is one of the ones that will be re-included. It was already part of the 30 companies comprising the PSE index, and that's going to be from February 14. And take a look at the 3-day chart here. It's already been up by 1.7%. And another one is, of course, Monde Nissin. And take a look at how Monde is performing now, up by close to 2% already. It's actually down in the past 3 days. But again, quite some surprises here, at least for the Monde side. Emperador had been moving already since last week. Now, they will be replacing Bloomberry and Robinson's Retail. Incidentally, Bloomberry, as expected, down by 0.5% upon that exclusion. But take a look at the biggest loser at the local index right now. That's RRHI, down a hefty 3.5%, going against the tide. Now, of course, according to the boards, this index review allows them to maintain a roster of the companies that best represents the entire market. Another thing that they are eyeing, Jess, is a dividend yield index within the first half of 2022. This, as President Ramon Monzon is saying, that there are more and more publicly listed companies right now, those are PLCs, issuing dividends, and they will be introducing this sort of thematic index within the semester. Now, analysts are seeing shares to be moving sideways on the back of this rebalancing, plus one other major issue, the rise in oil prices. Take a look at how Brent crude is now trading. That's up by 49 cents to $93.74 a barrel. They are also mentioning that the Philippines will be affecting our trading activity this week. And finally, just a quick peek on the banks. This, as they are in focus today, the biggest bankers association, that's of course BAP, said that they have boosted cooperation with our government. They're seeking new laws against cybercrime, or rather this as the illicit activities hit 1 billion pesos just during the pandemic. But they're saying, it's not all the banks' fault. Many of this is actually just clients, people like us, who will give away our own personal identification or OTPs or one-time passwords, having actually contributed to that fraud. The banking sector up by 0.4% this Monday morning. There is one key issue in the financial space when we talk about risks and opportunities, and that is cryptocurrencies. And here to discuss more about that, we have with us Tamma, Febrian, Associate Director of Fitch Ratings. Good morning, Tamma, and welcome to Businessworld Live.
Hi, morning. Thanks for having me here.
Tamma, let's kick off with the issue of cryptocurrency. It's been there for some time. It's been all the rage, when it comes to retail investors. But it's actually only recently when the big guns, the institutional investors, starting getting into this. You've got, Union Bank here in the Philippines. You've got DBS over in Singapore, in the US as well, dabbling into this. But tell us, how big of an interest do the big guns, do the institutional investors have in cryptocurrencies, and how does this affect the risk profile of such banks?
Yeah, so I think when it comes to interest, right, definitely we have seen a growing interest, and as you probably already seen, in the Philippines we have Union Bank, who is intending to set up a custodial as well as crypto trading services for their customers, and then in other parts of the world we have DBS Bank, as well as the Thai Siem Commercial Banks, which actually bought a cryptocurrency exchange, a majority stake in a cryptocurrency in that particular country. So definitely there is this huge interest, but as far as whether or not this is a sign that banks are going here, going gangbuster in terms of investing into cryptocurrency, I wouldn't say that's really the case. I think in general, banks have generally been still quite cautious when entering the market. I think at the largely in part because of some of the regulatory clouds over the market, as well as some of the price volatility that we're seeing here. If you notice as well, I think last year the BIS actually came up with a new a requirement that would be set to some of the cryptocurrency assets that the banks may hold, and that is very punitive. So to a certain extent, I think that will continue to hinder some of the banks from going and actually investing quite a bit, and having quite a bit of a huge the balance sheet risks on these cryptocurrency assets.
Okay, can you nuance what is keeping, you've said that regulation is keeping banks cautious, but what is keeping banks interested? What are the opportunities here for these big banks when they get into cryptocurrencies? Has it evolved from, simply speculative asset trading here towards something more fundamental, towards a real asset class? And consequently, what other risks are here on the table apart from the regulatory issue?
Yeah, so in terms of market opportunities, I think we all have seen that how the cryptocurrency market has kind of performed last year. Right? And there's quite a bit of a meteoric rise in the market, in part because of the large adoption in some of the retail users into the market, and just generally. But I think a lot of these are also speculative. In nature, so, but to say that it has turned into speculative trading into a more fundamental, I also wouldn't say that. I think there's generally been rising acceptance among the masses, but as far as the fundamental is concerned, I think there's still generally a big question mark on that front. And I think when it comes to risks, right? I have to preface this by saying that any assessment of the risks and opportunities in the cryptocurrency market will largely change, as the market dynamics change, and as a degree, and it all depends also on the degree of the engagement that the bank's intending to have with the market. Now, that being said, we have identified some of the key common risks that the banks will face when they try to dabble into the cryptocurrency market. So one of which is on the operational side, in particular, like you mentioned, the cybersecurity threats, such as scams and hacking, which we think that it's going to be a little bit more heightened in this particular space, as exemplified by some of the cases involving, a lot, even some of the largest crypto exchanges in the world. And I think when there's a hacking that occurred at a particular bank, I think that the reputational at stake is definitely much higher, right? Because you as a customer, these institutions are basically the custodian of your money, right? So beyond the reputational risk, we have also seen a rise of basically, risk when it comes to money laundering, as well as terrorism activity, which is going to be a little bit harder for banks to track and control, given the anonymous nature of the sector. And I think in terms of financial standpoint, I think we all know that the volatility of the sector, which this is very high, and that could actually lead to a heightened earnings risk instability going forward, especially if the bank's revenue grew larger from the sector in the longer run. But I think, again, going back to my main point earlier, that at the moment we don't think that this is going to be very it's a big risk, from a financial risk, because the banks aren't really taking quite a bit of a big positions in terms of their balance sheets on these assets. Yeah. But this risk will evolve as the market continues to evolve.
Okay, has regulation caught up, at least in certain jurisdictions, maybe not in the rest of the world, with enough to protect the investors, let's say in the US or in developed markets where they've had cryptocurrency trading for quite some time? And can you see that encouraging? As you mentioned, it's still a drop in the bucket when you compare it to the rest of the assets, but do you see that evolving? And what's the timeline of that evolution in terms of regulation to make this, a more tradable, a more safe, let's say, and not necessarily safe, but at least a more regulated product?
Yeah. So in terms of regulators, what we're seeing here so far is that the regulators around the world haven't exactly been moving in lockstep when it comes to regulating the market. On one extreme side, we have, let's say, the case of China, which basically has has banned any cryptocurrency activity in that particular country, viewing it effectively as a threat to their financial stability as well as the society there. And one on the other extreme side, we also have El Salvador, which basically has recognized Bitcoin as a legal tender there. So right now, we're talking about domestically a BSP, like along with other, the regional counterparts as well, in the US and in Europe. And I think regulators here are generally still straggling between this spectrum, and they're moving quite cautiously because the development is also they're still trying to assess what exactly is the risk and opportunities here in the market. And I think what we're seeing here is that BSP has said that like many others, that cryptocurrency is not a legal tender, and has also voiced out all the risks that they in the market when it comes to volatility as well as on money laundering, etc. And they've also come up with some of the regulations on virtual exchanges. But if you ask me about like what will happen in terms of the future, in terms of regulatory development, I would say that it's going to be still relatively quite fluid. It still remains a little bit unclear at what direction will BSP will take going forward. But if the recent regulatory actions by some of the regional counterparts were any indication, where there's been generally some sort of tightening or scrutiny over banks' engagement in crypto or just in general crypto market. And we've seen that in Indonesia, Thailand, and Singapore. So I generally wouldn't rule out that also happening in the Philippines as well in the future. But the timeline, that remains to be seen. It really depends on the developments.
All right, Tamma, Jess here jumping in very quickly. Again, of course, you said the BSP staying very cautious about this. Would you say that this is at least a step in the right direction here? Is it the right move to make? And what's it going to take for at least for the BSP to be more bullish about cryptocurrencies?
I think in general, I would say any regulatory oversight of this market is a positive. Anything that could help, minimize the volatility, making it a little bit more streamlined, making it, making it less of a risk for investors to delve into this market is definitely a positive. But the big question mark is exactly how are these regulators going to regulate it? Because there's a lot of factors in place. Right? I mean, this is a virtual currency. It's very hard. It's not like some of the digital currencies that we are dealing with. So yeah, I think going forward, it really depends on the market dynamics and how the market really perceives the users really perceive whether or not this is really going to be, is it just going to be a speculative market, or is it really going to be something that will become a mainstream thing that people will be normalized to. So yeah, that's as much as I can say.
Mm-hmm. Well, more on that point, Tamma, would you say as well that how ready are Filipino retail investors to actually take up digital currencies?
I mean, I think generally there has been a rise in adoption, but when it comes to readiness, right? I mean, I think generally there's always been these pockets of society that are a little bit more, have a heightened risk appetite when it comes to investing in this currency. And people who are investing in these currencies are, they know what they're getting into, right? They know the volatility and so, but they also know the potential gains that they could have, So when it comes to readiness, I would say that, obviously these people, they do know what they're going into, but, when it comes to, in general, the masses, I think there's still a big question mark. I mean, to a certain extent, I would have to say that there's, from my point of view, there's also a big question mark over forecasting fundamentals of these kind of currency, right? So it's a big black box, and I think that's probably a sentiment that is shared by a lot of people in the masses right now. So yeah, as long as there's this regulatory cloud hanging over the market, as well as of this volatility, I think that it's a little bit tough to make it more mainstream in a way.
All right. All right, again, interest growing, but then some regulatory issues and oversights, of course, still hounding digital currencies here, or cryptocurrencies. Thank you very much for your time. Tamma, Febrian, Associate Director at Fitch Ratings.
Yeah, thank you so much for having me.
Now, coming right up, Finance Chief Sonny Dominguez expects the country's debt to GDP ratio to return to pre-pandemic level by the end of the year.
More of that and other stories when Business World Live returns. Stay with us.
You're still watching Business World Live here on One News. I'm Jess Delos Santos.
And I'm Danie, Laurel. Now, the government is eyeing a $500 million green bond offer this year that's to fund its climate change mitigation projects. Finance Secretary Carlos Dominguez tells Bloomberg that the SEC has already prepared the capital markets for green investments.
Now, for 2022, the national government is looking to borrow around 77% from domestic lenders for its total borrowing program. But despite the rising debt, Dominguez still believes that the debt to GDP ratio will return to pre-pandemic levels by end of the year or by 2023. Dominguez gives more details in this interview with Aslinda Amin on Bloomberg Markets Asia. Let's listen in.
I think that's not likely.
Is the Philippine government intending to, I guess, raise more funds overseas? Are there plans for that in 2022?
Yes, we are. But our borrowings, our plan for borrowings for next year are basically, we're going to depend on our domestic market. And the Philippines maintains its strong international presence by issuing global bonds in multiple hard currency markets such as US, Japan, and China. However, as I said, it's going to be around 75-25 in favor of the domestic debt market.
So we're looking at Panda, Samurai, Euro, Dollar, bond sale. Can you be a bit more specific, Secretary Dominguez?
Well, in the immediate future, we are looking at issuing about $500 million in green bonds. But again, we are waiting to see the favorable market conditions for that.
Earlier you talked about the Philippine debt. How do you think the debt is sustainable?
Well, I believe so. You know, our total debt to GDP at the end of the year was at 60.5% of GDP. And that's, of course, much higher than what it was in 2019, which was 39.6%. However, if you net out our internal government debt to government agencies, it's only at 54% of GDP. So that we still have it's sustainable, and it is basically within our rating peers range.
When it comes to debt to GDP, when do you see that level going back to pre-pandemic level? What is realistic?
We think by the end of 2022, 2023, we will start seeing a moderation of our debt to GDP ratio, because we expect a fairly high GDP growth rate, and that our tax collections are going to be much higher. In fact, this year, in 2021, our tax collections were already 9% over those of 2020. And by the end of this year, we will be at the levels, at pre-pandemic levels.
So higher tax collection, does it then mean that you won't need to plug revenue leaks? Are there plans for that?
Well, at the moment, as you know, we only have about 5 months left in this administration, and we are certainly working to get a fiscal consolidation plan ready. And my goal is that by the time we hand over to the next administration, we will hand over to them.
Here are the other headlines we're keeping our eyes on. Citing PSE data, the Philippine Star reports that dividends paid out by publicly listed companies has reached 402 billion pesos last year. That's up 17% from 2020. PSE President Ramon Monzon attributed this increase to the gradual reopening of the economy, which allowed companies to generate better income, resulting in bigger dividends for shareholders. Now, to showcase companies that provide high dividends, Monzon says the PSE would introduce a dividend yield index in the first quarter. He notes that some 40% of publicly listed firms give out dividends to their common shareholders.
Now, Philex Mining Chairperson Manny Pangilinan expressed support for the better regulation of mining companies. Now, in an interview with the chiefs, Pangilinan said structure should be amended to distinguish the roles of the two separate bureaus under the DENR. He pointed out that the Environmental Bureau should solely focus on safeguarding the environment, while the Mines and Geosciences Bureau should focus on regulating and promoting mining. Pangilinan said structure should be strengthened so that these two agencies can work separately but harmoniously. He pointed out that in the US, the Environmental Protection Agency is separate from the mining regulators, allowing a system of check and balance.
We have to ensure that our regulator is also well-funded, better educated, and if the mining industry has to support that, to fund the operations of a regulator, so be it. I think we should support that because the more informed our regulators are, I think the better it is for the mining industry. Then better safeguards are enforced and adopted, no? And that should be welcomed by the industry as a whole.
And that's a first look into the business day this Monday, February 7, 2022. I'm Jess De Los Santos.
And I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.